Hi, everybody. Guess what season it is? It's corporate earnings season for the first quarter of 2026. And this is what Tom was talking about, the stuff that matters. However, right now, it kind of feels like you're driving in the fog with the headlights on and they're bouncing back and making it harder to see. You might feel uneasy, even though the road ahead of you might not have changed. And that's a lot like what's happening in the market today. Investors are focused on the short term issues, like they should be thinking about, right? Things that are in the news, things that come from the Middle East, rising oil prices and higher interest rates. Those are the things that are forefront of our mind and creating noise and causing the market to jump around. But underneath that fog, the engine of the market, those company earnings, the health of the corporations, well, that's doing pretty well. And then, as a matter of fact, corporate earnings are expected to grow again this quarter by double digits, a very, very healthy price. And that is the sixth straight quarter that we've seen this. Companies tend to do better than expected. And that's some good and some bad on that, right? Because when companies do better, that means it's already priced into the stock market. And so if it's priced in, the stock market doesn't react and have a great big party. It's just kind of like, okay, you did phenomenal again. But when it surprises, that's when we see those bumps, right? And we're seeing a lot of bumps right now, especially in the technology industry, which has been driving forward, and it's increasing the efficiency and driving the long-term growth. Another encouraging sign that we're seeing is how companies are handling these higher costs. Even with the higher energy prices and interest rates, many businesses have managed their expenses carefully and kept their profits steady. Corporate America today is less dependent on energy than it was in the past. And also, the United States has produced a lot more energy within ourselves, helping isolate from these shocks. Now, we don't ever assume that the road's not going to curve, so we need people to stay alert, but that's what we're here for, right? The investment committee. We're doing the same. We're monitoring not only the conditions in the short-term market, but what's going on underneath the market conditions, future tensions, long-term debt, how corporate profits are doing, any slight changes that might be needed to be made to our portfolio with the future in mind. Because remember, you've already been establishing that income plan, and we've been talking to you about thinking about the now money, the soon money, and the later money. So as that fog starts to lift, we can go back to focusing on the fundamentals, the longer term outlets. And of course, for retirees, we need to keep a pace of everything that's going on and keep your portfolio moving as steady as we can, but also expecting the bumps in the road, right? As Tom said, I think it was, the ship is going through the ocean and these waves, these headlines are hitting it, but it's not throwing us off course. So as always, please, we'd love to hear from you. Reach out and ask us if there's something that you need us to talk to you about.